Long-term portfolio.
Long-term investor.
Long-term investment.
Long-term investing is really,
Yes. I know I have to do long-term investing. I have to invest for the long term. Only then I can achieve my life's goal. Only then I can achieve financial freedom. But how much money should I invest for the long term? How much money every month from my income should I invest for the long term? Now, no one tells this, right? If you have this doubt, then this video is for you. In fact, this is going to be an eye-opener, life-changing video for you. I know it is tall claims, but I'm definitely going to deliver. I've built an Excel sheet, an ultimate financial planner with which you can plan your life and with which you can calculate how much money you should invest every month throughout your life so that you can achieve financial freedom and you can achieve all of your life's goals. Welcome to the 12th episode of the complete learning series of stock market investing and trading. As always, I've put the entire series into a playlist. The playlist is available here in the I button. Make sure you watch all the videos in the right order and learn really well. Let's all invest together and grow together. Yes, in the series so far, especially in the long-term investment masterclass that we've started, through the last video, you've clearly learned what long-term investment is, why you should be doing long-term investment, and when to do long-term investment, and all the basics about fundamental analysis as well. And as we ended the last video, the largest question is how much money you should be investing every single month. And I'm going to give you a clear answer, a subjective answer, so that basically, I've built an Excel sheet and I will teach you how to operate this Excel sheet so that all of you will get a subjective answer as per your life, your lifestyle, your expenses, your future ambitions. You will be getting an answer which is tailor-made for you, and that money is what you should be investing every month. Excited? Because in the next 15-20 minutes, you're actually going to find out a number which is going to change your life, which will help you achieve financial freedom. So let's get started. The name is Sharique Samsudheen. Welcome to Market Feed. Okay, so what I've basically done is I've made an Excel sheet, and into the Excel sheet you have to give some basic inputs. Inputs like what your current age is, what is your planned marriage age, when are you planning to retire, and what lifestyle are you maintaining now, what lifestyle are you planning to maintain after retirement. All these basic questions I'll be asking you. You have to just input these basic details and the Excel sheet will tell you what amount you should be investing every month. At this point of life, as in this stage of your life, at a later stage of your life, and even at the time you're retiring. Cool? You're going to get that magic number, and after you get the number, the next step is to start investing. How awesome, right? And in order to make things even simpler, I'm going to explain this by using two stories. One story of an unmarried man and another story of a married man. And for the fun of it, for the video, the stories that we are going to take us, number one is of Ajay Ajith. You all know Ajay, right? So Ajay Ajith is the unmarried man in our story today, and the married man is our own Aditya Raj. We call him Aadi, right? So Aadi would be the married man. And full disclosure, Aadi is not married yet, but it's almost all set. He is planning to get married in the next few months. So that is that. So we will be using their stories and their actual numbers, and we'll put their actual numbers into the Excel sheet, and we'll see how much money they will have to invest so that they can reach financial freedom and they can achieve their life's goals. How awesome, right? But before we get into that, as I always do, let's do a quick revision. Now, before doing the revision, if you have not seen the previous video, the link is here. You have to see the previous video so that this video makes a lot of sense to you. Now, quick revision is two things. Number one is why to invest for the long term. You all know this already, right? Invest for the long term so that your invested amount grows at a pace faster than inflation, and it grows into a huge corpus. And this huge corpus, huge money, which have formed out of your investment, will take care of all your future life's goals, ambitions, and will eventually make you financially free. You will achieve financial independence. The next thing to quickly revise is when should you be doing long-term investment? When should you be putting money to buying stocks or mutual funds, whatever you are buying for the long term? So the answer is very simple, right? You can either do lump sum investments or you can do SIP investment. And as we have learned, lump sum investment is when you have a huge amount of money with you, all the money you are investing in one go. SIP is when you, from your monthly earnings, you are investing a fixed amount every single month or every single quarter or every single week. It's up to you, right? That is why it is called systematic investment plan. That is, at a fixed time period, you keep investing. And as we have learned in the previous video, SIP mode of investment is always better when you're investing for the long term. Okay, cool. Now we have all agreed on to the why of long-term investment and when to invest for the long term. You've all agreed to the fact that you'll all invest every month a part of your income for the long term. Cool? Now the big question is here, right? How much money should you be investing every single month? Who will tell you? That's exactly what we are going to discuss in today's video. Now, as we discussed in the last video, there is a blanket umbrella rule to this, which is very famous. A lot of influencers keep talking about this, but it is useless, right? Anyways, let's hear the rule once again, which is the 50-30-20 rule. Now, the 50-30-20 rule basically says that out of your whole income, 50% you have to spend for your life's needs. What are your needs? Food, shelter, transport, all of those are your needs. So 50% of your income, spend for your needs. Next is the 30% of your income. Spend the 30% of your income for your wants. What are your wants? You might have to go out to eat. You might feel like going out and watching a movie. You might want to buy a new phone. All these are wants. So 30% of your income spend for wants. And the final 20% of your income, the rule says that invest that amount. Invest that amount for the long term. Now I completely or kind of completely disagree with this rule, because this rule cannot be applied for everyone, simply because different people have different lifestyles, different earnings, different aspirations and ambitions of life, and different people want to retire at different ages and they want to have a different lifestyle after they retire as well. So given that this can never be applied to everyone's life, but this is better than nothing, I would say. 50-30-20 is better than not investing at all. So if you start with this, well and good. But if you're actually planning to get better with investing, if you're actually planning to meet your life's ambitions with investing, if you're actually planning to become financially free with investing, then you have to follow what I'm going to tell in this video. And that's exactly where our Excel sheet is going to help us, which is actually going to make you a tailor-made, custom-made plan, which will tell you how much money you should be investing so that you can achieve your life's goals and you can become financially free. So let's get into the Excel sheet. Let's do that. So as you see the Excel sheet here, let me tell you this again. This is actually going to be a game changer, a life changer for you. This will tell you the number that you should be investing, but more importantly, this might even tell you that your current earnings is not enough with which you can become financially free eventually. And you might be scared, you might be intimidated, you might be a bit sad also, maybe after watching this video, but this is being brutally honest here. This is actually telling you the real honest truth to your face. Cool? And no worries, the link to download this Excel sheet is given down in the pinned comment and description. So after watching the video, after learning how to fill and operate the sheet, make sure you download the sheet, input whatever data is relevant to you and find out the number. And do one thing, along with marking your attendance in the comment box, make sure you also comment how much money you should be investing for the long term. I'm absolutely thrilled to see what your number is. Cool? Then let's get started. The first person we have selected for the story, for the case study, for operating the Excel sheet is Ajith, our unmarried hero for the story. So I'm coming into the sheet and I'll give you some basic operation guidelines for the sheet. So if you look here, there's one tab here which says input data here. And you have to basically give a lot of basic information about you here. And if you go ahead, whichever tab you go to, whatever yellow cells you see, only in the yellow cells you have to give an input. Everything else is calculated by the sheet itself. Cool? Then let's come to the very first tab. So I've already collected all the data from Ajay. I'm just going to narrate you the story. I've sat with Ajay. I've asked him the right questions. He has given me the answers. I've put the answers here. First question to him from me was, what is his current age? Maybe you did not know this already. He's only 23 years of age. And I asked him, when are you planning to get married? He said 28. Okay, cool. I've put in 28. Now don't look into this, right? This is calculated by the sheet and it's shown here. So you need not look there now. The next question to him from me was, what or when are you planning to be retired? Now, very funnily, he said 40 years first. But let's be very practical here, right? My question to you is, when are you planning to be absolutely free? Planning to stop working completely? Planning to stop having any income source completely? And that I urge you to put a very realistic number there. Only then you'll get a realistic answer to how much you should be investing. So though he said 40, then he said 50, but eventually he agreed that okay, 60 is a realistic number. So retirement age according to him is 60 and he is planning to live till 80. Let's see how it goes, right? Also, the next input to be given here is inflation, and we all know inflation in India is around 6%. But to be absolutely safe for our calculation, we have taken inflation of 7%. Now, my next question to him was, if you're planning to get married by 28, do you have any financial goals before you get married? And he said yes. He said he wanted to actually build money or build a capital with which he can fund his own marriage, with which he can go for honeymoon as well. He actually said that. So that's his goal number one, his marriage and honeymoon. Number two, as a goal, he said was he want to buy a car by the time he turns 26. So 28, marriage, and 26, car. These are the two goals that he said he wants to work for. Then I asked him, don't you want to plan your retirement? Don't you want to plan for your financial freedom as well? To which he clearly said yes. Then I opened 3 tabs for him. Okay, we are basically going to see how he is going to plan for these goals which are listed here. How much money he should be investing for these goals. The first goal is the marriage goal, right? So he is currently 23. So I am actually inputting 23 here, right? So 23 and the goal age is 28. My question to him is, what is your goals amount in current value? That is, Ajay, if you are going to have your marriage today, as in today, your marriage and your honeymoon today, how much money would it cost? And he said 5 lakh rupees. Maybe that's the amount he is planning. So I put in 5 lakh rupees and see what happened here. The goal amount is auto calculated by the sheet. That is, by the age of 28, whatever is costing 5 lakh rupees today would cost 7 lakh 1,276 after accounting for inflation. Right? So at that age, he should be having 7 lakh 1,000 rupees so that he can take care of stuff which cost 5 lakh rupees today. What are they? His marriage and his honeymoon. Right? So coming down, if you see here, everything else is calculated by the sheet itself. The next input, as you can see here, the sheet is asking us, is there any existing investment that you have or existing money that you have you would love to put in as a lump sum investment for the same goal? And he said no, zero. I'm not planning to put in any other money as a lump sum investment for this goal. I'll only invest every month from the age of 23 till 28 in order to achieve this goal. And see, everything else has been calculated by the sheet, and it says that if you are investing into an investment asset or an asset class which is growing at a CAGR of 12% every year, all you have to do is invest 8,587 rupees every single month from the age of 23 till 28, so that you'll have 7 lakh 1,276 by the age of 28 and you can take care of this goal. Cool? Or else it is even showing you that if your investment is giving only 10% returns every year, 10% CAGR growth every year, then Ajay, you have to invest 9,056 rupees every month. Or in case if your investment is giving only 9% CAGR every year, then you have to invest 9,298 rupees every single month. Now, Ajay is a very intelligent person. We all know that, right? He knows about the financial markets and he knows that this being a short-term investment plan, this is only a 5-year goal that he's setting, right? He shouldn't be investing a lot in the equity. In fact, his distribution, his exposure should be more towards debt and less towards equity. So he knows that realistically he can only make 10% growth to his investment. And because of that, he knows from the age of 23 to 28, he should be investing 9,056 rupees every month just in order to take care of this goal, which is his marriage goal. Now his second goal was car goal, right? Car goal, he said he wants to buy by 26 and he wants to plan for a down payment amount of 3 lakh rupees, and the 3 lakh rupees is in today's value, and by 26 that would grow to actually 3,67,513. So the agenda here is he's 23 now. By the age of 26, he should be having 3,67,513 rupees. As you see here, there's no lump sum amount he is reserving. He's investing for this goal, and going by what the sheet is saying, he has to invest Believing that he can grow his investment by 10% every year, he has to invest 8,796 rupees from the age of 23 till 26 in order to reach a corpus of 3,67,513, which he can pay as a down payment for his car. Cool? Moving ahead. Now the next question to him was, if he wants to plan for his retirement, even before he gets married, how much money he will be ready to invest every single month. So I said, hey Ajay, keep in mind that every month from 23 to 26 or 23 to 28, you're basically spending or investing 9,000 rupees for your marriage and nearly 9,000 rupees for your car as well. That is 18,000 rupees you're already investing when you're 23 to 24, 25, 26 and all. By 26, the car investment amount is done, but till 28, he has to invest the 9,000 rupees for his marriage. Even then I asked him, based on your earnings right now, how much do you think you can invest every month for your retirement goals, for your financial freedom goals, with which he said 20,000. And from his answer, I input here 20,000. And I asked him, how much money this is going to stay invested from 23 till your retirement age of 60. That's what he said here, right? He said he's planning to retire at the age of 60. So from 23 till 60, this is going to be here. So where are you planning to invest this? He said it would be in a balanced portfolio with good exposure to equity, not bad exposure to debt, and a lot of different asset classes as well. And he said he would get 12% returns on this. So I put 12% here. And the number of years for which he is investing the amount is actually 5. Why 5? Because if you see here, this is pre-marriage contribution to retirement. Post-marriage contribution to retirement we'll actually calculate separately. So pre-marriage contribution to retirement is only for 5 years, right? From 23 to 28. So that if you see every month, if we invest 20,000 rupees for 5 years, growing at 12% every year, at the age of 28, he would have a separate 16,49,727 rupees. Cool? So far it's very clear. Basically, if you see here, if you look into Ajay's life from 23 to 28, every month he's nearly investing 9,000 for his marriage plan, 9,000 for his car plan, and another 20,000 for his eventual retirement plan. Cool. Now my next question to him was, see, you're anyways going to get married by 28. After marriage, at the age of 28, how much do you think would your monthly expense be? Post-marriage monthly expenses. This was my next question to him. Now, there are a few assumptions here. I said him, okay, now assume that at the age of 28 itself, right when you got married, you're going to have a kid as well. Not one kid. How much ever kid you want to have eventually in your life, assume that you have that many number of kids at the age of 28 itself. Do you get that? My question to him was, how many kids are you eventually planning to have in your life? He said 1. Now I said, assume that at the age of 28 itself, assume that you have that one kid and assume that you have all the expenses related to that kid. Cool? Then I asked him, assume you are married now, today. What would your monthly expenses be? Please come to the sheet and input here in the yellow cells, input all the expenses that you think you might be having today as a married man with the one eventual kid you're planning to have. This is what I asked Ajay, and this is what he filled. Okay, he filled that rent he would be paying would be 25,000 rupees. Vehicle plan. See, he bought a car, right? Now he has to pay EMI for the car. Everything is accounted here. So that would be 20,000 rupees. Now he has wants, insurance spends, emergency fund setting up spends. For all of those, he's setting aside 25,000 rupees. Now we asked Ajay, why are you setting aside 25,000 rupees every month? He said he has to do that, right? See, even though he's only spending 10,000 out of this 25,000, another 15,000 would remain there. Maybe after 6 months, this 15,000 would add up to 90,000 rupees. And with that 90,000 rupees, he might go for a short trip, he might buy a new phone, he might give a gift to someone, right? So he said wants has to be 25,000, and that is one advice from my side to you as well. When you are putting in wants plus insurance plus emergency fund, put in a higher amount, because that amount will really help you meet your life's wants. Right. The next one, he said for his kid, one kid, he would be spending 10,000 rupees every month for the school fees and the tuition and the kids' needs and wants, stuff like that, right? Then he said he would be spending or giving 10,000 rupees to his parents every month, which is great, obviously, and 8,000 rupees every month he has tax expenses. So adding this up is his entire expense per month. Now, if you see here, at the age of 28 is when this would actually incur. These are amounts in today's value. Now what I've done here is I've accounted for inflation, and this would be the eventual amount which he would be spending at the age of 28 after accounting for inflation. I know there is an assumption here, right? Kid doesn't come at the age of 28. He might actually produce a kid only at the age of 30 or 31. But again, we are taking these assumptions to be super safe in our calculations so that your life planning will never ever go wrong. So anyways, at the age of 28, he would actually need 1,37,450 rupees every month to meet his life's expenses. Now if you come here to the very first tab, the same amount 1,37,450 is taken here as expected post marriage monthly expense. Actually now starts the actual retirement planning. Now I am coming down here, moving down to retirement planning tab. Very important, right? So retirement planning for him, marriage actually happened at the age of 28, right? He is planning to retire at 60, life expectancy is 80, right? Now coming down, I want you to input something here. Existing investments. Remember, pre-marriage contribution to retirement, he had actually invested 20,000 every month, and by the age of 28, he actually has a corpus of 16,49,000. Now in the post-marriage retirement planning, he's actually putting the 16,49,727 here, and that is growing at a 12% for the rest of his life. That is by the age of 60, this investment alone would grow to 6,19,99,601 rupees. Cool? Coming back, today his current annual expenses at the age of 28 is 16,49,401. Where did this come from? His post-marriage monthly expense, which is 1,37,450 into 12, which is 16,49,401. And if this is his annual expense at the age of 28, and every year his expense is growing at an inflation of 7%, he is living till the age of 60, and if he wants to retire then, until the age of 80, if he wants to live with that amount alone, then the corpus that he should make is 15 crore 36 lakh 25,023 rupees. There are just two assumptions here. Assumption number one is after retiring, inflation at that point would be 8%. That is, when Ajay is 60 to 80 years of age, inflation at that point would be 8%. And whatever corpus he is building, which is 15 crore rupees, that he will actually put into an asset which would grow at a rate of 8%. Maybe a liquid fund would do. Liquid debt fund, we'll learn about those later, no worries at all. And that itself would grow at an 8% rate. So if that is actually happening, and the next assumption is that post-retirement, his annual expenses would come down by 25%. Would do, right? Because his kid is not dependent on him anymore. He doesn't have to travel as much as he used to travel before. So obviously, post the age of 60, his expenses would come down. How much? The expenses post-retirement would be 75% of the previous expenses. That is a 25% cut in expenses I have taken. If you think that your expenses would come down by 75%, if your post-retirement expenses would only be 25% of your previous expenses, then put here 25%. I hope you understand that. Anyways, as per this calculation, his corpus required to retire by the age of 60 is 15 crore 36 lakh 25,023 rupees. And guess what? Coming down, if he is actually growing his money at a rate of 15% CAGR, all he has to invest is 16,420 rupees every month from the age of 28 till the age of 60, and he can be financially free. Note the point, at the age of 28, he's actually getting married. His wife would also have an income. So even if he is investing 16,000 rupees every month, he has a monthly expense anyways, right? Monthly expense of 1,37,000 every month, and he's investing another 16,000 the same month. Basically, he has to have a monthly income of nearly what? 1,55,000 to 1,60,000. That is his income plus his wife's income. Still things could be taken care of. Now let's be very realistic here, right? Maybe he wouldn't be able to make 15% CAGR every month. He being he can maybe make 15% returns, but a normal person might only be able to make 12%, given the fact that you're investing into a very balanced asset class with a lot of debt exposure, bond exposure and whatnot. So if you are actually planning to make a 12% returns on your investment for the rest of your life, you have to invest 34,409 rupees every month. Remember, 34,000 investment here plus a 1,37,000 rupees monthly expense. So that is nearly 1,70,000, 1,75,000 expense every month. Which means that your monthly income should be above 1,75,000. Not just your income, yours plus your spouse's income. Cool? Do you think you can do this? Anyways, you definitely have to come to the calculator, put in your values, and then you can get your amount. Now you might think everything has ended here. Ajay can easily achieve financial freedom. No. See, here planning has come only till his marriage. Now he has planned for his retirement. Now he can have other plans as well. He can plan for his kids' marriage. He can plan for a foreign trip at the age of 40 maybe. He can plan for building a house maybe. Right? All other plans can also be made. And for that, I'm actually showing you a tab here, an example goal planning. That he does not need to plan now. Only when he reaches at the age of 30, when he actually has the goal, he can come here, he can put in his age. When then, this is after 6-7 years, he can actually tell that his age is 30, his goal in the current value would be 20 lakhs and the goal age is 55, and the sheet will tell him how much money he will eventually have to invest every month for that goal, which has to be planned then. For now, all Ajay has to plan is his marriage, his car and his eventual retirement, all which is already planned for. Amazing, right? Then he asked me, Sharique, can I plan for my house as well? I said, why not? You plan for your house as well. So I asked him a few questions. He gave all the inputs. I've put all the inputs here and you can see the answer here. Current age again is 23. Age of building house, he said, is 45. And house inflation in India currently is, real estate price inflation is nearly 4%. I have already put in that. And I asked him, what is your dream house current price? He said 80 lakh rupees. Now his dream house's cost when he turns 45 would be 1 crore 89 lakh rupees after accounting for 4% inflation. Now you asked him, how much percentage are you planning to give down payment? He said 30%. Now that would be 56 lakh 87,000 rupees, right? Now let us talk about the house loan here. So loan amount would be, see, if he is already making the down payment of 56 lakh rupees, the down payment would be 1 crore 32 lakh rupees and loan interest would be around 7% and loan tenure would be 20 years. Basically, he's taking the loan at 45. So 20 years taken as he's actually paying back the loan by the age of 65. And this actually said that if his investment every month would grow at a rate of 12%, all he has to invest is only 4,389 rupees every month. If he actually does that, by the age of 45, he will have an amount of 56 lakh 87,000 rupees, which he can actually give as down payment. He said, hey, that's all cool. I can easily invest another 4,389 rupees. But I said this is all cool. You invest 4,000 rupees every month from the age of 23 till the age of 45. You can easily give the down payment. But after paying the down payment, you'll have to actually pay a loan EMI amount of 1,02,297 rupees every month for the next 20 years of your life. And he said, hey, if I'm actually living in a rented house, I would only pay a rent amount of what? 65,000-70,000 rupees then. Accounting for inflation, this is 1 lakh rupees plus which I'll have to pay as EMI. And he said, okay, let me rethink about buying a house, and he has gone away. He might not buy a house. So this is all very critical when you plan your life. Have your goals very well defined. Put numbers to it. See if they can be planned. See if you actually have the money to be invested with which you can realize the plan. Only then you'll actually succeed in your financial life. Anyways, so far it's super simple, right? Ajay, as a person who is only 23 years of age now, for the next nearly 5 years of his life, he is investing nearly 38,000 rupees every single month. And after that, after getting married, as we saw here, in retirement plan, as we see here, since he is going for a 12% growth only, that's what he is assuming, he is investing 34,000 rupees every month after his marriage, along with his spouse's income as well, and he is set for life. He might have other goals as well. Here and there, some other goals also, which might require another 5, 10 or even 20,000 rupees every month. Even then, post-marriage, he's only investing 34,000 plus another 20,000, 54,000 every month with his plus his spouse's income. And he actually felt confident to live his life now. He actually said that I can actually see achieving my life's goal and achieving financial freedom now. Amazing, right? I really want you also to feel the same. And I know maybe based on your income, numbers might not work for you. What is the only solution there? Increase your income or reduce your expenses. You'll actually have to make those modifications. Only then you will be able to meet your financial goals, dreams and aspirations. Now let's quickly go to Aadi's story and also understand Aadi, being a married man, how he is planning your life. Now, I know among you, there will be unmarried people. You can follow planning as how Ajay did. Now, there will be married people as well. Now, you can follow plans as to how Aadi is planning his life. Now, all inputs are already given here. I'll quickly go through it. You'll easily understand because I've taken quite a lot of time to explain Ajay's planning. Right now, Aadi's age is 26. He's married also at 26, and his retirement age again he is planning to be get retired at the age of 60, and life expectancy again is the same of 80, and inflation is 7%. So what, after all calculations, what he understands is the fact that he needs a retirement corpus of 18 crore rupees to retire. And I'm quickly jumping into this. What he understands is he has to invest 33,109 rupees every month into something which grows at 12% CAGR every year. Then he can easily achieve financial freedom. And again, I'll give you some clarity here, right? For 15% returns, what you have to do. See, as you can see here, if your investments are invested in different asset categories like shares, which are direct stock investments, mutual funds, fixed deposits, provident fund, etc., then there is a chance that your investment can grow at a rate of 15%. But if you're a bit risk averse, you want to be super safe, and if your investments are invested in different asset categories like just mutual funds, fixed deposits, provident fund, gold, etc., then it can grow at 12%. Now, this is doable by everyone. But to pick the right stocks and invest and grow it at a 15% requires some skill which we would learn, right? So for very, very, very high safety, let's assume that Ajay, and just like that, Aadi is also only assuming a 12% growth rate. In that case, Aadi has to invest 33,109 rupees from the age of 26 till the age of 60, and then he can actually make a corpus of 18 crore 85 lakh rupees with which he can easily be financially free. He can easily retire. Now, I'll go through the other tabs also to make things very simple here. Since this is a married person, the first question itself is post-marriage monthly expense, because pre-marriage plans are anyways not there. So the first question is post-marriage monthly expense. So whatever monthly expense that you think you are incurring today, you can put it here, and the retirement planning tab will take everything and will calculate and tell you what amount you should be investing every month. And the amount here is mostly zero. Now, if you are a married person and if you are planning to start your investment journey today, and if you already have some saved up amount with you, maybe you have 10 lakh rupees with you, right? Put in that 10 lakh rupees here, and see, calculations have changed here. Now you have to invest only 24,000 rupees. Now Aadi does not have any money saved up or invested, so he is putting 0 here so that he has to invest 33,109 rupees every single month. Now I asked Aadi, is retirement your only plan? He said no. He said he wants to have a kid and he wants to plan for the kid's marriage as well. And that's why he already planned for his kid's marriage here. Now his age is 26. You can put your current age here. He is planning to have his goal at his age of 51. That is by the time his kid might be in between 22 to 25 then, right? So he is planning to have his kid's marriage then. And the current value of the goal is 10 lakh rupees. That is, I asked Aadi, if you were to have your kid's marriage today, how much would you be spending? He said 10 lakh rupees. So the current amount I put 10 lakh, and the inflation adjusted amount by the time he is 51 is 54 lakh rupees. And for this goal, he is not saving up any money upfront. And for this, he has to again invest another 2,889 rupees every single month till the age of 51. Clear? Then he also said that he wants to go for a foreign trip by the age of 30, that is in the next 4 years. So then I asked him what would be the expense for that. He said 5 lakh rupees today. So by the age of 30, the goal amount would be 6,55,000 rupees. He is not investing or saving up any money upfront. So if it's actually growing that money at a rate of 10%, because again, just a 4 years investment, right? So it has to be in a high debt exposure investment asset class. So he's only getting 10%. He has to invest another 11,161 rupees every month. Only then he can go for his dream foreign trip by the time he turns 30. So if you look here, Aadi is 26 now. Every month he has to invest 33,000 so that he can be financially free at one point. Also, he has to invest nearly 2,889 rupees every month till the age of 51 so that his kids' marriage can be taken care of. Also, he has to invest another 11,000 rupees till the age of 30 so that he can go for the foreign trip. So I think from the age of 26 to 30, at least he is investing 33 plus 11, 44 plus 3, 47,000 rupees he is investing every month. And I'm sure after 30, he'll have other goals as well. Maybe another foreign trip by the age of 35. So when he is 30, he'll come here, create another tab here, plan for that as well. So I see Adi throughout his life, he would be investing anywhere in the tunes of 40 to 60,000 throughout his life for meeting his life's goals and aspirations. How awesome, right? Cool. Now it's up to Adi to make sure that his income is always at a level so that even after his expenses, he can invest such an amount every month so that his financial goals are met. Cool. Now I've told the story. The Excel sheet is there for you to download. You can easily download the Excel sheet. You've learned how to operate the Excel sheet as well. You can easily put in your numbers and find out how much money you should be investing every month, every single month, so that you can achieve financial freedom. And as I said earlier, some of you might feel a little bit intimidated. You might even feel scared by the fact that your expenses are so much, your income isn't that much, you don't have enough money to invest, and because the answer says that you have to invest 20,000 and you might not have 20,000 every month to invest, you might feel a bit scared, right? But that's the brutal reality, honesty of the life that we are living, right? You either will have to increase your income, upskill yourself, start a side hustle, increase your income, or reduce your expenses, and make sure that if the Excel sheet says you have to invest 20,000 every month, find that 20,000 rupees and invest it every month. Only then you can be financially free. Otherwise, you have to be relied on the very famous Indian financial freedom mechanism of my kids will help me. Right? You'll have to actually do that. I know there are a lot of assumptions here. We haven't accounted for your child's education, as in their college education. Maybe you might need some 5, 10, 20 lakhs for your college, for your child's college education. But we thought, hey, let your kid actually take a education loan and go for that. But again, this is completely customizable. You can add any number of goals that you want to have. You can plan for those goals as well. You can work around the sheet and you can definitely find out your numbers. And again, let me say there are a few assumptions, but there are also assumptions which make this very safe. Like, just after marriage, we've actually started planning for your kids' school education and monthly expenses. So a lot of things like that, and assuming that the inflation would always stay at 7%, because we have seen as a country develops, inflation actually comes down. Still, we have taken 7% inflation throughout your life. So there are a lot of safe assumptions here with which the calculations can never go wrong. There is very less possibility and probability that the calculations here would go wrong. Basically, if you are investing the amount with this Excel is telling you, then you might not have to worry financially in your life, is what I strongly believe. Now, that is it from my side for this video. I hope this is super helpful. I want all of you to download the Excel sheet and find the number that you have to invest. Now, before signing off, let me tell two things. We are going to learn depth of fundamental analysis in some of the following videos. Now, your question would be, why should you learn fundamental analysis? You should learn fundamental analysis so that you can actually pick great stocks on your own. And when you pick great stocks on your own, you can actually grow your investment at a CAGR rate of even 15% or even 18% or even 20%. As we saw in the sheet, if you're actually growing at 15 or 18 or 20%, your time required to financial freedom might come down. The amount you have to invest every month will drastically come down, or you can actually build a much larger corpus with which you can have a much luxurious life. So why should you learn fundamental analysis? So that you can actually get great at picking good quality stocks so that you can have a much better life. Now, earlier I said, right, you have to either increase your income or reduce your expense, or now I'll give you another answer, or learn fundamental analysis really well so that you can actually grow at a CAGR of maybe 18% so that maybe your numbers would start working for you. That's number one. Next thing I have to tell us, now we have learned what long-term investing is, why should you be doing long-term investment, when should you be investing for the long term, how much money should you be investing, what is the next question, where should you invest? Right, that is the next question we should answer. Where should you be investing? I really want to see this happening. By the time we are done with the long-term investment masterclass, which is the next few videos, I really want you to see you investing the amount which the Excel sheet is telling you, that amount you should be investing every month into an asset class or into a portfolio of investments that we are going to learn in the next few videos. Let's do that. Definitely, right? So that is it then. Make sure, as always, if you like the video, smash the like button, and note, as always, this time I really want you to share this video to as many as people as possible, because they should also be doing this, right? They should also be calculating and planning their life. They should also be finding the number, and they should also start investing, because my dear friend, if you don't start investing like this, you would kind of be screwed, right? Because at the age of 50, 55, you might not have enough money to live. You might not feel like retiring. You won't be able to retire, and you might have to work till 70, 75, and God knows when, right? So don't make your life a mess. Make your life very simple by actually following this. So share the video to maximum number of people. If you have any doubts in operating the sheet, make sure you go to the comment section, ask the doubts. I'll make sure that I'll clear your doubts. And if you haven't joined the exclusive community I maintain on MarketFeed app, the link to join the community is also given in the pinned comment and the description. So that is it from my side for today. Let's learn, invest, trade, and grow together. See you in the next class. Bye-bye.